Hi, I'm David Shea, the Director of GSA's Center for Charge Card Management, and welcome to the GSA SmartPay Program update. This is a class taught from the perspective of the program manager, and it addresses emergent issues, opportunities, and challenges for the GSA SmartPay program. I want to say a special welcome to those who have attended my classes through the years. I've taught this class for more than a decade, but also extend a welcome to those that are joining for the first time. Fiscal year 22 has seen few new policy changes affecting government charge cards government-wide. And a major theme of this year, as you'll see as we progress through the slides, is recovering spend from the impacts of COVID as agency mission delivery returns to some level of normalcy. So you'll see the focus of the presentation will be on some constant themes that we've talked about through the years that remain good ideas for the agencies in terms of maximizing value for the program. So in terms of agenda, as you see on this slide here, we'll be talking about program historical spend and refunds, program growth, performance trends and observations, spend across the various generations of the GSA SmartPay program. We'll give you a quick updates on a few policy issues that are relevant for this year. We'll also talk about the journey. In other words, where are we going with the program in the coming years from the GSA perspective, certainly in coordination with the participating agencies. And as a major part of that journey, how can agencies continue to maximize the value they obtain from the program by business line? So we'll approach it from a purchase card perspective first, travel, and then fleet, and then we'll wrap up with common card fictions and associated realities. Now, as you see on this next slide, and this is one of my favorite slides that shows the trends in the program since its inception in the late 1990s. And you're part of an incredible value story, probably one of the biggest revolutions in administrative management and government of the last 50 years. And, look at the numbers, and we have a tendency to just gloss over these numbers, but I ask you to really think about it. 610 billion in total spend through 2 billion transactions, generating over 5.2 billion in agency refunds. Those are some pretty phenomenal numbers, and those are only through the end of fiscal year 21. So just a spectacular amount of spend to directly support mission, people traveling, frontline program personnel buying quickly what they needed to buy, fueling and maintaining vehicles across the federal government, all really important work that has been supported while at the same time keeping many of these relatively low dollar actions out of, for example, on the purchase card, out of procurement offices so that contracting offices could focus on larger procurements where the training and experience of their personnel more greatly benefit the actions at hand as opposed to these lower dollar level buys. Although there are certainly opportunities as a payment tool for the purchase card in contract spend, and we're going to talk more about that in just a bit. So if we look at fiscal 21 specifically, as you'll see on this chart, slide 4, spend in 21 was up about 1.7% versus the prior fiscal year at $29.1 billion. Transactions were down slightly at 69.5 million. And what was happening there is we saw some significant reductions still into fiscal 21, particularly in travel. We also saw some reduction in purchase in terms of the number of transactions, but the average spend per transaction on the purchase card actually went up slightly. In terms of refunds, they were down 0.3% at basically $390 million going back to agencies. And the total number of accounts was up substantially, just over 12%. Most of that growth was largely in travel card, and there was some growth in purchase cards as well. So you can see the breakdown of the various account types in the lower right-hand quadrant of this slide. The majority of the accounts being in purchase, and then, in travel. And then in purchase, again, something very interesting has happened here. I mean, we've had almost a tripling in the number of purchase accounts under the SmartPay 3 program compared to SmartPay 2. So it's wonderful to see agencies further leveraging the streamlined business process, the cards encompass. And we also can see that that fleet was over 800,000 accounts at the time. Left-hand lower quadrant of this slide, you can see the various breakdowns of the transactions. The majority were in fleet. Most of that's fueling vehicles, followed by travel, even though travel activity by agencies was still suppressed from the pandemic. And then in purchase, just over 19 million transactions. So a few trends and observations talking about performance through fiscal 21, and that is that the purchase card performance remained largely consistent. So agencies were still turning to the purchase card during the pandemic to support their missions. They were using it to acquire COVID-related supplies. For those agencies that participated in the micro-purchase COVID reporting process that we had in place, we've seen a trend towards reducing or decreasing COVID-related spend, and that continues into fiscal 22. Spend with small business under the program with regard to purchase cards, based on the commercial data that we receive, shows that over 30% of the purchases made with a purchase card are with small business. That's significantly in excess of the government-wide contracting goal. We're also noticing that in FY22, travel spend is up significantly, and I'm sure many of you are seeing this, or your cardholders are seeing this. Airline, hotel, and rental car costs are up significantly. In the rental car area, particularly where you can get a rental car, which in some cases has proven to be a challenge. Fleet spend is up significantly in FY22. Unfortunately, we're all aware of why. Increasing fuel prices are driving much of that. Overall participating organization refund levels, this is the cash back to agencies that they earn for using the cards, continues to be up significantly. And we'll see some indicators of this in another slide or so. But the refund rates under the SmartPay 3 program are running significantly above SmartPay 1 or SmartPay 2 levels. In terms of FY22, year to date, we're seeing some significant increases. Again, as I mentioned before, as agency missions recover from the COVID-related impacts. This data is through April of FY22, and you can see spend is up a spectacular 10.6% to $14 billion. That's across all business lines, purchase, travel, and fleet. Total transaction activity is up primarily because we're seeing recovery in the fleet area. That's 28 million transactions versus what we saw in fiscal 21. Total refunds are up 13%, another spectacular increase at $177.5 million. And the total number of accounts is remaining about stable compared to last year. So we're seeing some significant increases this year in agency activity, and we expect that to get even stronger during the higher buying periods we generally see in the with the cyclic nature of card spend through the third and fourth quarters. Again, this data is only through April. So how does the spend under the SmartPay program, the current generation SmartPay 3, compare to the predecessor generations of SmartPay 1 and SmartPay 2? And here on slide 7, you can see the answer to that question. You can see that in terms of total spend, that's about midway down the chart here, we're looking at some significant increases so far in terms of SmartPay 3 relative to the period of time it's been in place. So, we're just a few years into SmartPay 3 versus these other programs, which reflect 10 years of spending activity. And you can also see that in terms of cumulative refunds, and again, this data is through FY21, we've already beat the refunds earned under the entire SmartPay 1 program under the 10-year period of performance for that particular program. So the program, the value to the agencies continues to grow in terms of delivering savings. It's not only the streamlined business process, but the cash back that the agencies get to reinvest in mission delivery. So a few quick updates. As I said, there weren't a lot of government-wide policy developments specifically pertaining to purchase cards and or other card business lines under the program. Section 889, as you know, relates to contractor use and provision of certain prohibited Chinese technology. That does not apply just to purchase cards, but it does affect them. And we added a link to our SmartPay website to a DoD bot, and we're very grateful to DoD for allowing us to put that link up there to help search for contractor representations in the GSA system for award management. So for those vendors that only do micro purchase level business with the government, there is no requirement to register in SAM. However, contractors who do business above the micro purchase level with which you might do business would be registered in SAM. And so this offers a capability to help look those up. We're also looking into some other bot technology that may be even easier to use. This particular bot is very good, but it's really a power user bot. It's not designed for just strictly cardholders. It's more keyed to acquisition personnel. But we're hoping to put some easier to use tools up there later on, perhaps this fiscal year. Implementation of multi-factor authentication for contractor bank electronic access system sign-on is continuing across various agencies. A number of agencies have implemented it. But, from a security standpoint, the program is only as strong as its weakest link. And we know that agency IT infrastructure varies. The ability to adopt various technologies varies. So this is taking time across the entire footprint of the program, given that most agencies use GSA SmartPay. But it's something that together we need to continue to drive, particularly at the headquarters level, because the bad actors, the fraudsters out there, are constantly attacking, probing for weaknesses in government systems, in commercial bank systems, and we want to do everything we can to protect the information in these systems. Everybody plays a role in security, so it's something that we need to continue to keep a focus on until we've got multi-factor authentication implemented with every participating organization, or any compensating actions that a particular agency may be able to take based on their technology posture. Lastly, on this slide 8, the government-wide conversion to a unique identity identifier, or UEI, is not having a significant impact on the GSA SmartPay program. And the reason for that is that, you've got to recall that the banks pay the various vendors or merchants that our cardholders transact business with, not the government. So therefore, the banks in making commercial payments are not looking for a UEI. Now, when your agency goes to pay the bank for those transactions, a UEI is needed, but that's only 2 UEIs, right? That's one for US Bank if you're serviced by them. The other would be, of course, for Citibank. And that information is well known. Both banks have UEIs if it's needed for your particular agency or organization's payment systems. So this is another reason for your agency to use SmartPay. And if you don't know, the UEI system is run by GSA, not out of my office, but it replaces the DUNS number, which you may be familiar with, that's been used to identify vendors, I think, since the 1960s. So this is a pretty big change here to a new coding structure to identify vendors. But again, what we're seeing so far anyway is minimal impact on the overall GSA SmartPay program. So let's talk about the journey we're on here and where's the program going. And this is from the standpoint of GSA SmartPay 3 is designed to support participating organizations through fiscal 2031. So we've got basically, 8.5, 9 years left on the program. And from the perspective of my office, the Center for Charge Card Management, what are some of the key things that we're looking to do? We want to continue to drive contractor bank performance optimization to ensure not just best in class, but beyond that, world-class service and modern payment solutions. We want to pursue key opportunities to increase agency program benefits. I touched on that earlier, and I'm going to touch on that a lot more in some of the coming slides, again, by business line. We need to stay focused on process simplification and payment friction reduction. Process simplification, one of the primary reasons, one of the foundational reasons the charge card program was established as a result of major acquisition reform in the 1990s was to have a deregulated process for quickly buying things that frontline program personnel needed to accomplish their mission work. And sometimes I think in the agencies, when we're developing policies, we lose track of that idea. And there has to constantly be this balance between reasonable controls and this flexible, streamlined procurement approach that the cards embody. So that's something we have to continue to focus on. And we have to ask ourselves when we're generating new policies, particularly at the agency level, but also at government-wide, is, what effect is this going to have on that foundational reason for the cards existing? How does that impact our cardholders? As much as what we do ought to be transparent in the background, invisible to the user, but accomplishes, that good balance between usability, flexibility, agility, and reasonable internal controls. On the payment friction side, we'll talk about some of the evolution of technology in the payment space that's available under SmartPay. Some of you may already be using these friction reducing approaches in your personal banking or payments. We want to work closely with the contractor banks to maintain a strong security posture. And as I mentioned before, continue working with agencies on implementing multi-factor authentication. We want to continuously evolve our training. We want you to be able to access training as you currently do through multiple channels. We want to keep it simple, direct, and effective. And we want to do the same with our data products out there. We often engage with the headquarters AOPCs at least quarterly through the data management group on innovative views of data that we're generating, dashboards that we generate for agency headquarters, primarily in the CFO Act agencies. And of course, we want to continue to maintain these close relationships that we have with the agency headquarters, primarily level 1, level 2 AOPCs. We greatly value that. We're going to continue to grow those relationships during the remainder of SP3. So let's dive a little deeper into maximizing program value. Start with the purchase card business line. So FAR Part 13 requires agencies to maximize the use of simplified acquisition procedures. And within the heading of acquisition, simplified acquisition procedures, micro purchasing is a component. So one of the things that agencies, at least at the headquarters level, should take a look at is reviewing federal procurement data system data for your organization spend at $10,000 and below for transactions not indicating card use. And look at that data to determine, are there additional opportunities for card use for streamlining and savings? We have found that there are several $billion in transactions at $10,000 and below across the government that are occurring that are not on a purchase card. Now, in fairness, some of those are contract payments, and some of them are open market purchases that are still on a purchase order. And there may be various reasons for why that's happening. But the point here is to take a look at that data and explore why these things are happening and make sure that your agency isn't missing an opportunity to derive further benefit from the card, because we suspect there are cases in there where the card could be used, but it's not. FAR 31.3 states that agencies should not limit use of the purchase card to micro purchases. And this gets to one of the major future benefits of the program to agencies is in payments under contracts above the micro purchase threshold. And we're going to talk a little bit more about that. One of the first steps in understanding where the card might be able to be used for contract payments, as well as taking a look at other additional micro purchase opportunities for purchase card spend, starts with working with your servicing contractor bank and doing what's called an accounts payable review. And this is generally not a one-time thing. It might take a couple of times through the years to really get this process down. And the accounts payable review is not an end in and of itself. It's actually a fairly high-level first step to start the dialogue with your servicing bank about additional opportunities for card use and savings. So at the card holder level, when we're talking with our card holders as AOPCs, one of the things we want to do is encourage the use of existing ordering vehicles and best-in-class sourcing. So use of these existing vehicles can assist with 889 compliance. Remember, that's the issue with we can't buy prohibited technology, or we can't buy from companies who are using prohibited technology, either in the commercial side of their business or the government side, doesn't matter. In many of these government ordering vehicles, such as GSA Advantage, there's already screening that's being done to make sure that these vendors comply with the 889 requirements. We want to continue to encourage acquisition from small business. This is consistent with the President's recent executive orders regarding small businesses. Small businesses are also the main engine of employment in the country. So there are collateral policies within the FAR about buying from small business whenever possible. I know there's not a mandate under micro purchasing for small business, but nonetheless, as we've done through the years, and the cardholders have been remarkably successful at buying from small business when they could. So we want to keep doing that, encourage further acquisition from small businesses whenever possible. Agencies may also want to consider leveraging the GSA Commercial Platform Program. And I've got a web link here on slide 11 that you can take a look at if you want to learn more about commercial platforms. Those are contracts with Amazon, Fisher Scientific, and Overstock. And then agencies may also want to look at how they buy from other agencies when they need to buy from another agency. The purchase card can be used for intergovernmental spend up to $24,999, which is the current limit in the Treasury Financial Manual. And making these intergovernmental buys using the card within that threshold is the fastest, simplest means of interagency purchasing. There's no complex forms, terms, or conditions required. And don't let anybody tell you that payment systems don't have a cost. Whether it's filling out forms or doing terms and conditions or reconciling transactions, whatever it might be, there's a cost associated with that. And we want to be mindful of those costs, not only in terms of time, but in terms of the actual systems themselves, and make a best value decision about how we're going to buy within certain thresholds of spend. So certainly within the 24,999 and below, buying from another agency, you could be buying radio licenses, you could be buying supplies, services, you could be buying training. We'll see some of the top spend entities in terms of intergovernmental a bit later in the presentation. But it's another part of the puzzle in terms of effective payment solutions for agencies that are streamlined and readily available for you to leverage. So back on the contract payment issue, while not all contractors accept carded payments, increasing these payments continues to be the largest single opportunities for agencies to garner further GSA SmartPay benefits over the remainder of the program. In fiscal 21 alone, contract payments using the purchase card were in excess of $3 billion. One of the keys to making sure that your agency personnel can leverage the cards for contract payments, though, relates to something relatively simple, and that is they've got to have the cards in hand to be able to use them. So agencies need to ensure that warranted contracting officers, authorized ordering officials, payment office officials, and maybe other officials within your agency have cards in hand to help support increased use, so you get that additional benefit while maintaining reasonable internal controls. If you're looking to build in card acceptance for higher levels above micro purchases contract payments, we continue to do research into this issue within GSA itself. And we've also talked with several agencies that are already leveraging the card for contract payments, part of that $3 billion total I mentioned previously. And one of the biggest lessons learned was if card acceptance for payment is built into the solicitation and original award of the contract. So one of the things that APCs need to be doing on the purchase card side is talking with procurement officials in your agency, making them aware that when they award new contracts, one of the things that they might want to consider is building in card acceptance from the get-go for payments under that contract, so that your agency can enjoy the additional benefits of card use in the contract payment space. This isn't always an easy thing to do because of the acquisition systems that may be used in relation to awarded contracts. However, the process changes are probably not as difficult as people tend to think, and we really need to get our toes in the water here, give this a shot, start to learn more about it, document the challenges, and then deal with those challenges to make the process even more effective. Going back to the FAR for a minute, and this is the actual FAR 31 language that I mentioned earlier, so you can see it with emphasis added. So again, agencies shouldn't limit card use to just micro purchases. So if you have people in your agency telling you or your cardholders that they can't use the card above micro purchase, that's really not supported by the FAR. In fact, the FAR says, and I'll read the second highlighted section here, the agency should encourage use in greater dollar amounts by contracting officers to place orders and pay for purchases against contracts established under Part 8 procedures, that's FAR Part 8, when authorized, and to place orders or make payments under other contractual instruments when agreed to by the contractor. So there's a lot of opportunity here. You know, when you look at contract spend reported across the government last year into the federal procurement data system, it was more than $600 billion. And you look at our spend on the purchase side, the government purchase card, it'll generally range from like $18 to $22 billion. So you can't tell me that there aren't more opportunities with contractors who accept cards. Again, it's not going to be all of them, but contractors who accept cards, who will be willing to be paid by cards out there, and therefore more benefit for agencies to derive. On to slide 14, we talk about FAR Part 32, which is an unusual provision in that an agency may decide, assuming the vendor agrees, to make carded payments under a contract, even though the FAR clause addressing those payments isn't even in the contract. So that's really creative, that the clause doesn't have to be there. So again, if you or your cardholders are hearing from contracting personnel, hey, we'd like to pay this vendor with a card, but we really can't because we didn't put the clause in the contract. Well, that's not an excuse. As you can see here, the central piece is the contractor agreeing to be paid with a card. And as we all know these days, who would have thought even 4 or 5 years ago that we would be paying for $1, $2, $3 value meals on a credit card, that the economics of that would work. But it does in the commercial sector. So the costs that merchants have to pay, not that we pay, but that merchants pay for accepting cards, has become lower in some cases. In fact, I know that Visa recently announced reductions for small businesses in terms of the fees associated with card acceptance. You've had Mint and Square and other commercial entities come into the marketplace on the vendor side. And so really some of the old school thinking about this truly has to evolve. And there's a huge opportunity here for agencies to garner savings. I know that in many cases, budgets are at very healthy levels right now as we come out of the pandemic, but they aren't necessarily always going to stay that way. And so the opportunity to start to pursue these additional savings through further use of the card for contract payments is now, and start to build that so that as budgets start to become perhaps normalized or reduced, that we've got these additional revenue opportunities to help fund mission delivery. Another interesting thing about payment by purchase card is it's not subject to Prompt Pay Act requirements. Now, think about that. Why would that be? And the reason it would be the reason it is because the actual merchants get paid by the banks and not the government. So if you have particular vendors that for some reason or another there's been a challenge in paying, or your contracting people have had problems paying a particular vendor, there's substantial prompt pay penalty interest being generated, those costs incurred, or maybe in your CFO's office you're hearing about this. This may be a solution to that in terms of paying that vendor with a card, because then those payments are going to generally happen within 1 to 3 days, which aids in cash flow, which back on the small business point is of particular benefit to them. And at the same time, you've got no prompt payment liability. So another pretty cool aspect of paying by card. Now on the government to government front that we touched on earlier, here are some of the merchant category codes, or MCCs, that those transactions typically fall into. And we have two solution sets through our contractor banks under the SmartPay 3 program. There are interchange-based government to government, or G2G solutions, which is basically using the purchase card like you commonly use it. And then there are non-interchange based G2G solutions, which have like a flat, low per transaction fee. Now, the advantage to the interchange-based G2G is it rides the rails of the existing bank systems. The non-interchange-based require the deployment of new systems that both the buyer and seller would have to be enrolled in. So it would be a different process from your existing purchase card process. So where I think the growth opportunity here mainly lies is in the interchange-based G2G. And here, as promised on slide 17, are some of those top 10, we'll call them merchants, in terms of the government to government transactions. And I'll just give you a few moments to peruse that. Notice that some of them happen to fall underneath the travel card, where we have lodging or billeting, as opposed to just the purchase card. Some activities here support our veterans. Very proud of the card program involvement in that. Printing efforts, training, Unicor, things like that. So the cards already support wide use, government to government, but there may be other opportunities in your agency. Not everyone knows that for a particular product or service you're buying from another agency, that agency may accept cards. And all you need to do is have your cardholders ask. This is an actual site from the Treasury Financial Manual Bulletin that talks to card use for intergovernmental. And IGT, the acronym IGT, refers to intergovernmental transactions on this slide. So we'll just give you a moment to take a look at that. All right, let's talk about travel cards. What are the opportunities for maximizing program value here? So agencies may want to consider virtual travel cards, which are available only on our Visa branded products at this time. The virtual cards offer enhanced controls. For example, they could be valid for just a particular point in time or up to a particular dollar amount. They can be particularly useful for invitational travelers or other unique travel use cases. I know we have one agency that's implemented these cards. They go to some pretty unique places around the world, and some of the hotel systems are not the most secure. So the use of virtual travel product that's only good for a limited time, that account number is only good for a limited time, is very useful in further protecting the traveler and the agency in the event that account data is compromised at the hotel. Also, agency headquarters might want to consider moving to mobile payments and mobile wallets. We have some agencies that have started to do that primarily with their travel card portfolio. And these offer increased ease of use as well as further transaction friction reduction. So what I think is really cool about this is I've been in situations just in my personal capacity where I've actually forgotten my credit card. I've been at a merchant where I needed to transact, but I had my phone with me, and I was able to bring the card up on my phone and make the purchase on my personal card. Also, from the travel perspective, if agencies aren't already, they might want to consider leveraging Fed rooms. They reported total agency savings of $24.2 million in fiscal 19 alone, which was really a high watermark year for travel spend across the government. And lastly, another area that agencies might want to consider if they don't already is use of the travel card for local travel and combining that with leveraging the transit network companies Uber and Lyft. And as you'll see on this next slide, GSA has awarded government-wide rideshare, ride-hail blanket purchase agreements to Lyft and Uber. Coverage is available in the top 50 markets where government employees travel. The cardholders load their account number into the Uber or Lyft app for auto billing. They got to make sure they select the right card when they're using Uber or Lyft in their official capacity. And of course, those transactions will earn refunds just as other card-based transactions. Your agency headquarters would work directly with Uber and Lyft to set up these accounts. In the fleet world, as you've probably seen in the president's executive orders and other activities, for example, here at GSA Fleet, transition of the fleet to electric vehicles is starting to occur. It's going to take multiple years for that to be completed. But one aspect of this is thinking about electric vehicle charging. So what are the policies, procedures, and equipment that can accept fleet cards or use EV payment apps, which can accept fleet cards? So you kind of need to start to think about this, especially from an agency-owned asset perspective. And one unique twist in this might be where employees are able to take vehicles home. If they're assigned a vehicle that they can take home, and it's an EV, and they have to charge it at home, how's that going to be paid for? And the fleet card may be able to help out with that. Purchase cards can also be used to purchase chargers within the micro purchase threshold. The pricing of chargers varies greatly depending on your requirements, what your agency is looking for. So it's something that your agency can check out on the GSA Fleet Awarded BPAs for electric vehicle supply equipment, or EVSE. And I have a link here on this slide 21 if your agency is interested in looking at that BPA information. It's quite comprehensive. And lastly, if your agency uses or buys bulk fuel, DLA leveraged the SmartPay program, the GSA SmartPay program, for a new DLA logistics fuel card supporting bulk fuel or emergency use. And there's another link here on slide 21 for that DLA logistics fuel card, should your agency be interested in additional information. So something else to look at, and yet another use case for the card, adding value and supporting agency missions. Now, lastly, I just wanted to touch on a couple of common fictions I often hear about, particularly from people who aren't familiar with our program. And that one of them is that using cards are more expensive, related to fees charged to a contractor or merchant, or fees that some merchants might attempt to charge to us as cardholders. So with the program existing for over 20 years and more than $2 billion in contract payments in fiscal 21 alone, for the majority of transactions, we don't see additional fees assessed when buying by the card. In fact, a lot of businesses already build the cost of card acceptance into their pricing, whether you pay by card or not. We also recommend that in the event a vendor does attempt to charge a fee, that where you can, and we can understand that your cardholders can't always do this, but look to other vendors who don't charge the fee. As I mentioned previously, every payment system has a cost, whether it's in time or effort, system development, maintenance, and things like that. So when you're looking at these costs, make sure you're comparing, apples to apples. The other fiction that I sometimes run into is using a card is more difficult or involves more work. And this is in the area particularly of contract payments. And what we're finding in our research is that that's not necessarily the case. It really depends on your particular agency's policies and processes. But with existing processes for payment against contracts, how many times of our acquisition officials or our program officials, receiving officials, entering the same data multiple times to facilitate payments through those traditional contract payment processes? We've actually mapped payment processes that GSA uses internally and found that it involves either the same number of steps or slightly less steps to use a card for payment. As I mentioned earlier, though, this is a business culture change, shifting to payment by card under contracts. And like any other change, you've got the change management aspects of it. There will be a learning curve that your agency will come down when adopting a new procedure. So it is very challenging to implement, but I think once we head down this path, we learn more about it. It's like anything else. It starts to get easier to do. So that's a walkthrough of the program from the government-wide program manager's perspective. I hope you found it informative and enjoyed it. I want to thank you very much for your time and attention. I wish you a great forum this year. And don't forget the GSA SmartPay website, smartpay.gsa.gov. It's a wonderful resource if you haven't looked at it. With that, this concludes this presentation. Have a great day. Enjoy the forum. Bye-bye.